Here's how you don't find investors for your startup. Blasting cold emails with your pitch deck, paying thousands of dollars to get press coverage, or the worst, paying thousands of dollars to go to a startup conference and stalking investors outside of the green room. Trust me on that one, I tried. Now, we're a venture-backed startup. I talk to dozens of founders every week, and I keep seeing these same mistakes. So here's a better guide to make sure that you don't screw up like I did. Now, the first thing is understanding what stage your company is in. Most investors have a focus. They do seed to Series A or Series B and above, and very few venture funds invest in pre-seed. So don't waste your time going to them if you're in that stage. Question is, where are you in this chart? Well, you're a seed stage company when you have revenue, probably around $20,000 in monthly revenue, and that obviously means after you've launched a product. If you don't have revenue, you're most likely a pre-seed company. Pre-seed companies have fully formed teams. They're not raising money to recruit their tech co-founder. All the skills needed are already in the team. And they have a solid plan to build and to launch the product because the money that they raise needs to last until they reach the next stage, which would be seed, which requires revenue. We have a whole video about this, also touching a bit on non-standard tech companies like hardware and deep tech startups. I'll link it below. Now, the point is, in the context of investors, is that in seed, you have metrics. You have proof that your product works, you have proof that your customers like it, and that you were able to figure out how to get in front of a few customers. That means that you have metrics that back you up, that convince someone to invest. Before seed, all you really have going on for you is your face. It's your reputation. Now, all investments are relationships, but as rounds get bigger, they become much more transactional. The earliest investor rounds are absolutely relationship-based. Your financial model might say that you're the next unicorn. If you don't have a financial model, by the way, here's a template that you can use. It's free to download. But if you don't have metrics to back it up, it's all speculation. It's just numbers on a sheet. Also, every startup's financial model says that they're a unicorn. That doesn't make you different, or it doesn't make you special. What can make you different is your track record. That's your job, your experience, your accomplishments, but more crucially, the network that your experience has created. If you have a track record, then you must also have a network. So that's where you would start. So the indisputable first step when finding investors is leveraging that network. And probably the easiest way is doing LinkedIn.
I'm excited to announce I've finished my beer.
Say I want to pitch Andreessen Horowitz, who invests broadly around early stage and late stage.
And I want to welcome everybody to Speedrun Demo Day.
Now, you can browse their website all you want. There is no submit your pitch deck buttons. It's all about relationships. So what you do is you go on LinkedIn, you find out if you have any second level degree connections with people on the fund. You click on your mutual connections and you start there. But remember, an intro isn't just an intro. It's somebody that's kind of vouching for you. If they're a startup founder as well, their reputation is kind of on the line too for just doing the intro. And I have tons of LinkedIn connections. Most of them I don't know well enough to ask for an intro. It's a big favor to ask, and you want to use those bullets wisely. LinkedIn also has an intro function, like a request introduction function, but I just prefer good old emails. Now, to make their lives easier, what you can do is you can send them a personal email. Remember that they should have a good connection to you. They shouldn't be just an acquaintance. And then a blurb that they can forward to the target investor. That way it's you, it's your words, the best choice of words to describe your company that gets sent to the investor instead of what your friend paraphrases. Now, normally in that blurb, you can ask if it's okay to send your pitch deck. Do not send it in advance. So A16Z is a pretty big name. It's not hard to find, but how do you find more, especially angel investors who are your best shot at the pre-seed stage? Now on that, I have you covered. We built a huge investor database on Slidebean with 20,000 plus investors that are filtered by stage, by industry, by location. By the way, location is much more important than you think. Yes, we all have Zoom, but remember the network factor. There's a good chance that you'll have better connections close to where you're based. Also, don't try to pitch investors where you're not based. Like, why would a US investor fund a startup on the other side of the world if they aren't even focused on the US market, if the founders are in an entirely different time zone? Now, for every investor in our database, we have their investor profile, we have their website, but most crucially, their LinkedIn profile. Now, when I had to do this myself back when we were raising money, it was a Google plus infinite spreadsheet exercise, which I hated and never want to do again. But in our Finder, you have their LinkedIn profile and you have this mini CRM where you can keep track of your conversations. And of course, if you share your pitch deck through Slidebean, you can check when they opened it and which slides they focused on when they read it. I'm gonna drop a link below where you can sign up and hopefully save a few hours compared to doing it the old way. Still, this is gonna be a weeks-long task to say the least. Really, people always underestimate that when you start the process of raising money, the founder who's doing the job will be gone. Like, there's no code, no marketing, there's no time for sales. This will be your job for weeks. That's LinkedIn, checking connections, emailing intro requests, and then calls, and then follow-ups. Raising money usually takes like 6 months, and the first 1 to 2 months are just mostly doing this exercise. And it will take all of your time as a founder, so make sure that the company's prepared to operate and to keep their momentum mostly without you. Now, I get this a lot from founders. What if I don't have investors in my network? My first answer is always, really? Thousands of investors out there and you don't have any second level degree connection to any of them? Have you actually done the homework to find them? Well, honestly, that's also me when I started my first company. I'm Costa Rican, I was new to tech startups, and I didn't know anybody. Now, I could give you a whole spiel about building your own network, and it's true, you can. I spent some time in New York, I've paid for plenty of startup conference tickets, I go to meetups and happy hours whenever I can, and I mingle, and I have been able to build a network doing that. But that takes time. It took me years, and a lot of money. And you should still do it, by all means, but your company doesn't have years. And to me, the best bridge was startup accelerators. Most will cost you company equity, but that's just the price that you have to pay to fast track creating a network. And that to me is actually the main value that accelerators provide. There are perks and there's guidance. Some of them even give you some money, but most crucially, it's a network effect. I'm actually a bit skeptical of remote accelerators, precisely because a lot of networking happens in person with beers and Catan. By the way, you should never pay for accelerators. They need to invest in you, not the other way around. You want partners in the accelerator to introduce you as the company that they invested in, not as their customer. Now, if you're in search of an accelerator, I made a tier list with the top programs from around the world and their upcoming deadlines, and we also announced the deadlines directly in our Startup Club newsletter. You can subscribe to that here. Now, make sure that you hit subscribe here, for more insider startup tips, and check out our video on budgeting a startup funding round. Catch you on the next one.